What's up, folks? So we are back. Okay, perfect. TikTok also working again since we had some issues yesterday. Everything is working now. So TikTok stream is on. YouTube is working. Okay, perfect. So I would say let's dive right into the charts. There you go. Okay. As always, we start at the daily to determine our higher time frame bias. So, as outlined in previous live streams, I'm looking for this volume imbalance to be traded down into, and yeah, I'm expecting price to actually use this fair value gap. Oh, we have to adjust. Oh no, it's already the March contract. Okay, so let's go to MNQ. Yes, sir. And now we can change between the contract months. Whatever. Okay. So we have this fair value gap here. Traded down, close below this daily fair value gap. I wanted to see it be used as an inverse fair value gap to, in the end, draw down into this daily volume balance right here, okay? So we close below it, and now seems like we are trading up again into this daily volume imbalance right here, okay? So yeah, it gets kind of messy, but you definitely want to have the quadrant levels on this volume imbalance right here and keep an eye on it. So since we are now above this daily fair value daily volume imbalance and above this daily fair value gap, it doesn't look too bearish for me right now. So we gotta see how this week is going to close. I guess, or I would expect price to trade down into this gap again and close the day inside of this volume imbalance, or maybe lay a body on top of this volume imbalance, because this is void of any trading. So there was no sell side or buy side delivery, and then we had sell side delivery. Now we're trading up into this volume imbalance again here, and in order for it to be efficiently delivered, we need a buy side, an up close candle, basically close above this volume imbalance. Okay, if we lay an up close candle on top of this volume imbalance, and this daily candle even also closes above this daily fair value gap, then I'm rather looking for higher prices on a short term basis. We also have this volume imbalance right here. So it's kind of difficult. We need to see how we close today. And yeah, initially my bias definitely was bearish. We showed some huge willingness to trade down into this volume balance again. Okay, so we had a huge discount opening gap, as you can see here. That was telling me, okay, price wants to get somewhere fast. Where was the next obvious draw on the downside? We had this daily fair value gap and also this volume imbalance, which is still inefficiently delivered. So Yeah, but seems like price wants to spend some time in this daily volume imbalance here, and yeah, it's kind of 50-50 now. Like I told you, it depends on how price closes today. And yeah, if it closes above this daily volume imbalance and above this daily fair value gap, for example, this daily candle closes here, for example, yeah, then I would maybe say, okay, we need to see how price is trading inside of this wick, and if price is maybe willing to trade up higher into this volume imbalance again. Yeah, it's kind of, as I told you, it's difficult to determine what price is wanting to do right now. We also have this bearish fair value gap that we can trade up into, which would be permissible, but it would be even better if we stay inside of this fair value gap, okay? We also have this weekly volume imbalance here, where this accumulation and this sideway kind of consolidation movement took place, okay? Trade up higher, wicked up into this volume imbalance, okay? So actually, I don't want to see price trade any higher than the upper quadrant of that wick, okay? So you definitely want to put gradient quadrant levels on this wick, on this volume imbalance, and yeah, maybe also on this daily fair value gap, but I guess that's enough for now. So you want to see how price is trading inside of that wick. We can wick up higher as much as this upper quadrant, okay? But we want to see a close below this midpoint. But even better, as I told you, we want to see a price close inside of this daily fair value gap here and this volume imbalance. Maybe wick up higher into the midpoint, but then give up the ghost and close the day inside of this volume imbalance, and then maybe roll over lower, looking for this volume imbalance right here, okay? So it's difficult to say what price wants to do now. It depends on how it is going to trade and use these PD arrays that are outlined. And yeah, let's see. Now let's go back. Let's go down into the 1 hour chart. We definitely have relatively equal lows here. In yesterday's live stream, I wanted to see price take out these relatively equal lows, but we didn't. We just kind of went sideways for the entire day and even closed inside of this range here during the PM session. So we have obvious sell side liquidity resting below these lows right here, but we also have this buy side right here, but I would definitely favor these relatively equal lows. So I guess we would be looking for some kind of buy side to be taken, viewed as a manipulation, and then head down lower, taking out these relatively equal lows. I guess that's a good game plan. And yeah, let's see. Let's delete this one here, this one here, and just look at this wick quadrant levels. Okay, so okay, 9:30 seems like We want to see manipulation to the upside. Okay, so we had a huge premium opening range gap. That means if we drop down into the 5 minute and we change and switch from electronic trading hours to regular trading hours, we had a huge gap to the upside. So we had a premium opening range gap. We take out buy side here. So let's annotate this as regular trading hour buy side. Let's put it above, make it purple. Perfect. Okay, we have obvious drawn downside. Bro, that's more than obvious. But yeah, we gotta see yeah, let's mark out this low first. We gotta see when price is willing to trade down in here. I guess we see it today, but yeah, we gotta see what price is going to provide us with in terms of yeah, price action and market structure. So we have taken out buy side now here and buy side here. So we can also annotate this one. Okay, let's go back to electronic trading hours. Okay, so we actually have taken out all the buy side necessary, or that would be realistic to view it as manipulation. So now would be the time to look for a market structure shift to the downside. But I guess we'll see. Okay, back to regular trading hours. First present for value gap in here. Bro, come on. Yeah, there's a volume imbalance above, so you want to make sure you include the volume imbalance in the fair value gap. So as always, our buys in the first 30 minutes. Bro, okay, it's not always bearish, but you can take advantage of ICT's model. He says 70% out of 70% out of 70% of the times price is going to trade down into the midpoint of this opening range gap by 10 a.m. Okay, so yeah, buy side taken. Maybe we see market structure shift now. Let's see. Okay, so we traded up into the daily premium wick upper quadrant. So if you go back to the daily chart, like I told you, you want to monitor this wick. So if you grade it and go back to the 1 minute chart, you can see how we used the upper quadrant to the tick, and we had a bearish reaction off of the upper quadrant. So yeah, let's see. Okay, so NQ ready to the upside has taken out London high, S&P as well, and Dow also. Okay, let's check out what dollar is doing. So DXY. Bro, TBC. Okay, so that was a draw for dollar. Price traded all the way down and wicked down into this one imbalance right here. We've taken out buy side here, sell side here. So dollar is actually more rather bearish than bullish right now. We also traded down into a discount. If you view this as a market maker sell more, also we taken out buy side, so we could view this as a market maker sell model, and ICT says market maker sell model is, did he say always? I think he said a market maker sell model or buy model, they have to at least trade down into the 70.09 level. So you don't require price to trade down all the way down to original consolidation, but down into the 79 retracement level, which would be here, okay, below this low right here. So if that's true, then this would be a retracement higher into this volume imbalance here, and we may see price use this daily volume imbalance to trade down lower and take out this low right here. This volume imbalance is also still inefficiently delivered, so we need to see bodies close on top of this volume imbalance here, okay, in order to efficiently deliver this volume imbalance. And yeah, so we have a short-term bias to the upside, trade up into this volume imbalance, and then lower. So I guess we could see some measure of buy side delivery on DXY before it moves lower. But overall, bias in DXY is rather bearish. So I actually want to see higher prices in MNQ, since these two asset classes are inversely correlated. So whenever you see dollar go down, you rather want to see MNQ move to the upside, okay? So yeah, we respect this order block here. Okay. So to be honest, I completely ignored this order block. I don't know why I wasn't aware of this order block right here. Nevertheless, we could have seen at least a wick down into this volume imbalance. But now if we respect the order block as we did here, and we weren't even able to trade down into this inefficiency, that means that this inefficiency stays open and price has another plan, and instead it wants to go seek higher prices again. Okay, so we respect this order block open level to the tick, opened up here, traded all the way up higher, completely ignored this volume imbalance in here and this wick here. So we now want to see price actually I gotta be honest now, reading price right now is definitely difficult, because I could see price still head down lower, but I could also see price move up higher. So we have a huge draw, which is this volume imbalance on the upside. We also have a huge draw on the downside, which is this volume imbalance on the downside. We also have the relatively equal lows on the 50-minute, on regular trading hours, and on the normal electronic trading hour chart. So bro, this in here is too obvious. But seems like we leave the sell side intact. So where one's priced to reach up into. Now if you go back to the daily, we have this week's midpoint in here. I mean, we have no news expected for today. Let me double check. But yesterday there were no news expected for Friday. So yes, okay, we only have 10 a.m. medium impact news. That's not too much of a concern. Um, sorry guys. Yeah, bro. Difficult right now. Bro, we have a huge premium opening gap. We have a huge premium opening range gap in here. Okay, so this acts like a magnet and draws price into it because there's a void of any kind of trading. Okay, so that's a draw on the downside. We also have these relatively equal lows, huge draw on a downside. So that's a big draw. These relatively equal lows draw price to the downside. We also have yesterday's opening range gap. So yesterday's opening price at 930 was here, so that's huge opening range gap, and this portion right here is still unfilled, which is below these relatively equal lows. So we have many draws on downside that should draw price into them. So hmm. Hmm. Let's go back to the daily. And let's see how price is using these weekly volume imbalance quadrant levels. Hmm. So price failed to trade up into the discount daily discount wick midpoint. Used weekly's volume imbalance lower quadrant level here. So on the one hand, we have many draws on the downside, but on the other hand, we are moving higher, 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 higher. And I don't have a clear draw where I say, okay, price is likely to reverse from here, and we have a clear draw on the upside on the daily chart. So price is kind of in between these two daily PD arrays. The daily volume imbalance on the upside and these relatively equal lows on the downside on the intraday chart. So I definitely don't want to force any trade. Hmm. Let's see. So I actually can see an intraday market maker sell model because these lows are just too obvious. This opening range gap also is unfilled, so I could see at least a deep retracement later on, maybe during 9:50 to 10:50 to 11:10 macro. Typically, when we have a market maker sell model or market maker buy model, um, you see price reverse and form the smart money reversal at around 10:30. So I guess we want to wait another 30 minutes before we take a short setup. I'm still rather short. I mean, my bias could be wrong. Technically, bro, I'm neutral on the daily chart. On a daily chart, I gotta be honest, I rather see higher prices. Um, but intraday chart looks too looks too bearish in my opinion. S&P also looks rather bullish on the daily time frame. When you look at S&P 500 on the daily chart, we have these relatively equal highs right here. We have taken out minor buy side here, had a retracement down into this weekly volume imbalance. Look, the bodies respect the high level of this volume imbalance, and we had this beautiful reaction to the upside, and these relatively equal highs are in close proximity. So MES looks way more bullish than Nasdaq. On Nasdaq, we had a deep retracement almost down into the volume imbalance, but on Nasdaq we respected this order block open level, and as you can see, S&P 500 only retraced down into this level right here, okay, while Nasdaq made a lower. So S&P is way more bullish than Anki, so if you want to go long, I would recommend you to go long on ES. Yeah, I mean on NQ we still have this daily fair value gap that is unfilled. We have these beautiful relatively equal highs, so that's a huge draw. We also have this daily volume imbalance below, so that's low hanging fruit on the buy side. So I guess we are rather bullish right now. This reaction off of this order block is clear. Didn't want to trade down into this volume imbalance, which shows strength. We were not willing to trade down into inefficiency. So when inefficiencies stay open, then that's definitely rocket fuel to your trade or bias. So if we are able to close above this wicks high here, and maybe also above this midpoint of that wick, we could see it draw up into this volume imbalance here, and also later on these highs and this daily fair value gap. But yeah, we gotta see how today's candle is going to close. I mean, we could also see all of this price action here later on be a wick, and we close all the way down below this open right here and then head down lower. I mean, that still could happen, but I don't know. If you look, maybe let's see, put this level on the opening price of this candles, of this candle. Go back to the 1 minute chart. And as you can see, we opened above these relatively equal highs, came back to the open ones here, and traded up higher since. So we didn't have some kind of manipulation to the downside. These lows right here were in close proximity to the opening price in here, and we just traded up to the buy side without manipulating these lows. Why not manipulate these lows in here and then move higher when we were bullish on the high time frame? So we just went straight up to the buy side. So I'm still rather looking for a market maker sell model to form. Again, I repeat myself, but these lows look too obvious for me. We also still have this opening range gap, which is still unfilled. And yeah, as you see right now, we also respected this midpoints of the daily wick. So let's see. Let's see. Okay. Oh, is there volume imbalance? Yeah, okay. So, bro, in my opinion, we are too much in a premium. So, I guess I definitely wouldn't be looking for a long setup. A short setup is the only thing I would be looking for personally, which would be against. Bro, I don't know if I would flip my bias. I mean, this entire week I was definitely bearish. So this week started in here on Monday, traded up, closed lower. We opened up higher, traded all the way down to this order block. That volume imbalance was the draw. Best case scenario. We respected the order block and now traded up into this midpoint, and we maybe see an intraday reversal at least, maybe at this midpoint. So it definitely depends on how we are closing this day. If we close strong, then my bias would rather flip to bullish. If we close weak below this midpoint or even inside of this daily volume imbalance and maybe close in here, create a wick, that's in the end of the day maybe could be a wick. If it happens that this is a wick and this candle closes in here inside of this volume imbalance, then I would still be rather looking for bearish and lower prices. So definitely depends on how we close and trade today. So okay, so I guess we have low risk sell, smart money reversal here. That's an inverse for value gap. Okay, actually it's not a fair value gap. It's the new PD array that ICT taught, which is a suspension block. A suspension block is more or less like a fair value gap, but you have a volume imbalance below and a volume imbalance above, and it doesn't matter if these wicks touch each other or if this wicks covers this whole entire range and doesn't leave a normal inefficiency there. So yeah, that's a suspension block. If we trade down lower and close below this fair value gap that I could see act as an inverse fair value gap, then maybe I would be looking for retracing up higher into this fair value gap, use this breaker, and go short then. So I would be looking for something like this. Bam, fair value gap, midpoints, breaker, maybe we form a fair value gap in here in this price leg, then I would be looking for a short. That's kind of the game plan. But yeah, we'll see. We will see. So that should be an order block. Okay, there you go. Bro, I almost bought 2 contracts long. Hell no. No, no, no. So, before I am looking for any shorts, I want to see price close below this fair value gap. Okay, so if we now look at MES, no, bro, MES. NQ made a lower low, while price in ES made a higher high, a higher low. Okay, like I told you in the beginning or in the middle of the stream, MES on a daily chart is the strong one of these indices. Okay, so if you want to go long, I'm personally not looking for longs, but if you want to go long, MES is the stronger leading indice to the upside. Okay, NQ is the weaker one, which is perfect. We are looking for shorts, so we want to short the weaker indice, which is NQ. NQ made the lower low, while ES, S&P 500 made a high low. Dow, on the other side, is just what? Dow is just not joining the party. Dow is moving higher. I guess we only move lower in NQ and also in ES when Dow finally decides to also create a market structure shift. So I guess when Dow is willing to make a market structure shift to the downside, that's when we see NQ really drop to the downside. But yeah, we'll see. We will see. So let's go back to MNQ. NASDAQ. Bro, where are... okay, bro. MES. That's a workspace for S&P. That's NQ. So order blocks, rejection block, rejected price, price trade all the way up high into this candlestick's rejection block, failed to trade up into this suspension block in here. So that's a weakness. As you can see, price closed all the way lower. So we want to see low prices now actually, and it closed below this midpoint. Come on, bro. Come on. So low hanging fruits would be the opening range gap high level. That's the easiest low hanging fruit on the downside. So when I go short, I want to have my TP at this opening range gap high level. Oh, it's fucking cold. Okay. There you go. There you go, man. Okay, no fair value gap in here. Maybe this one. Hmm. Breaker in here. So we touch breaker low level. I don't know why I'm not trusting this yet. Dow still not willing to shift lower. S&P moving lower right now. Um, Bro, we didn't close below this fair value gap. So I would technically be entering on this fair value gap in here. But yeah, I wanted to see a close below this fair value gap to validate this fair value gap to be an inverse fair value gap. But price is still not closing below it. Okay. That's not a meaningful close. Okay, S&P moving lower right now. Nasdaq still the weak one. So I guess it would be even better if we keep that fair value gap open. But we could actually see something like this. Huh. Ah, that would have been a beautiful entry. Hmm. I mean, this one wasn't meaningful, but nevertheless, we had a close below this fair value gap. So technically, that's already enough to validate this fair value gap as an inverse fair value gap. So when trading up higher into this volume imbalance and this order block, that was technically the entry I was looking for. But I wanted to see a more meaningful close below. But technically we had everything we were looking for in price. So Hmm. Okay. Close strong. 23 seconds left until this cannon closes. So best case scenario would be a close below this low here. Yeah, that's also pretty nice. Let's see. Of course, it readies all the way up higher. Bro, we had a beautiful close in here. So actually, ah, price could stop us out and trade up higher into this fair value gap again, which we anticipated to stay open. Auto block. Breaker block. Respecting our stop loss for now, but bro, I think we are stopped out. Okay, so maybe we get another entry. Yep, stopped out there. So, yeah, bro. Unfortunate. Unfortunate. We actually had a beautiful reaction here, but yeah, bro. Hmm. Okay, so breaker. Providing gap. Yeah, okay. See, that's what I was talking about. MYM DAO was still not willing to make a market structure shift, and I told you as soon as we see DAO move lower and make a market structure shift, that's when we can expect NQ to shit itself and just move lower. But as we can see, MYM made a higher high, a higher low. MES did a lower low. Looks like NQ. But MES made a higher high, while NQ still remains weak. Okay, no higher high yet. Okay, there you go. So go back to ES and MNQ. So we tried to short after price was using this breaker and this volume imbalance and this order block. Traded down lower below this inverse fair value gap. I entered on this fair value gap, stop loss above this order block, stopped out in here. I mean, bro, I'm happy. I put my stop loss in here. I didn't take bigger risk. So if I had put my stop loss above this high here, we would have been stopped out nevertheless. So stop loss placement was good. Just technically followed my model. Try to look for a market maker sell model. Seems like price is not willing to give us a market maker sell model. So bro, we actually had a beautiful reaction to the downside after I answered. But this next candle, bro, that's huge. Bro, this fucking candle is huge. Yesterday's loss was definitely unnecessary. I didn't want to take this trade. I wasn't fast enough to remove my sell limit order. And then I still had hope that we'd trade down into my break even to close the trade, but we didn't. It just smashed to my through my stop loss. So yeah, check out yesterday's live stream. We also were in a beautiful trade, but price reversed on us, and we managed to exit the trade below break even before we would have been stopped out. But yeah, yesterday's session was unfortunate. Yeah, bro, I'm happy. I followed my model. I executed, and this is what counts because I have some issues with second guessing and hesitating. So I'm happy if I'm able to execute on a trade and everything else. If it hits TP, great. If it stops me out, that's okay. We had reasonable, proper risk management. So yeah. Actually, this win last Friday, this $90 win, also I was anticipating a market maker sand model, but it panned out. Okay, so I was right about the market maker sand model, and now, whereas in today's New York session, um, I guess maybe we see higher prices. Because if you are looking for lower prices, bro, there would definitely be no need to again trade up higher into this breaker. Okay, as long as it respects this breaker, we could still see lower prices. But if it closes above, so technically whenever you have a breaker, the lowest down close candle in a bearish scenario would be the most sensitive point or candle of this entire breaker. So the entire breaker would be this one. Okay, these two consecutive down close candles, that would be the entire breaker, but this candle would be the most sensitive. So we want to see price at this break. This breaker should hold price lower. If it doesn't, then I guess we're not willing to see global prices and instead are looking for higher prices. So yeah, we'll see. So I'm sure I was not the only one who got wrecked in here. Bro, that one would have been a beautiful trade. Bro, in the future we will definitely catch these types of trades. Beautiful 5.5 to 1 risk to reward. We will definitely will catch these trades, but apparently not yet. We are not there yet. Well, it's also the last day of the week. We are approaching the end of the month. We expect holidays, so these are all factors that you have to be aware and include you in your analysis. So price respects the breaker and looking for lower prices, I guess. Dow still moving higher. Hmm. 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 1044. We could maybe look for another entry during the macro. We will see. We will see. So we have an order block. And we have a fair value gap. Hmm. Bro, that was still not looking for lower prices. Okay. Dow, come on. Dow, make a lower low, make a lower low, make a lower low. Come on, bro. Hmm. 3 minutes until 10:50 macro. We are still inside of a premium, so we have enough time to enter on this trade. So low risk, smart money reversal, low risk sell. Then we had a breaker. Order block. Wick. Okay, finally Dow made a lower low. Seems like S&P also wants to make a lower low again. So 10:50 macro, come on boy. Yeah, bro, okay. I don't know, I don't like this market structure. So that's a breaker here. Maybe if we Hmm. Hmm. Difficult. Come on. Last trade for today. Let's see. Come on, bro. Come on. Bro. Okay, I want to see price roll over now. The next candle should close a roll over. We respected this order block. So yeah, that's what we want to see now. Come on, boy, close weak. Close weak. Close below this one. Close weak. Close below, boy. So we respected the order block midpoint. Add a breaker here, midpoint. Wigged all the way up higher into this order block. Yeah. So we want to see low prices now. Now. That's first percent for value gap. So take profit at high level. Bro, what are you doing, bro? Come on. Come on! Dump! I know you want to dump. Come on, boy. Ah. I guess we just commit to the trade. S&P didn't make a lower low. Dow made a lower low, but bro, fuck this price action. I want to grab a drink now. I don't know, do we close the trade or what do we do? What do we do now? What do we do? What do we do? Okay, we are respecting the fair value gap, bodies close inside of the fair value gap. I think if price gets back to break even, not looking too bearish. S&P moving sideways. Dow also moving sideways. Okay, let's delete all this bullshit in here. This week holds price lower. Okay, let's delete all this bullshit in here. That's just too much on the screen right now. Bam, bam. Do we commit to the trade? You took a loss before? Yeah, bro. He already left. Okay, but yeah, I took a loss before. We went short in here. Stopped out here. So yeah. I hope this plays out now. Yeah, bro. I mean, you shouldn't hope it pans out, bro. You should just, in my opinion, you should just commit to the trade. You know, I'm following my model, and I cannot do anything more. I'm read price action right now, but bro, I definitely appreciate you. We'll see. Would be great if it pans out. We would make back today's loss and yesterday's loss, and even would have some profits. So let's see what happens. I guess maybe I should close it right now. I don't know. We are respecting this inverse fair value gap midpoint, so we're waking up higher, but body's respected. So I mean, I see it can pan out, but I don't like how price is moving sideways on ES, and also Dow. If you go to NYM, that was also kind of doing nothing right now. So maybe we should just close the trade on MNQ. Oh, bro, come on. MNQ. Let's see, I guess. What do you think? Will it pan out or not? JK, JQO, wee wee. Oh, there you go. Let's see, let's see. Okay, he says yes, it will pan out. We will see. So my low-hanging fruit target is this first percent fair value gap. Since high time frame bias looks rather bullish, I'm contemplating if I put my TP just above this level. I guess I will. So we have a 2.5 to 1 stop loss. Take a trade. So yeah, I want to see price close below this midpoint, and we didn't. So now I want to see price consume all of this wick, and best case scenario trade even below this wick and close below the wick. That would indicate weakness. That's not too much of that's not too much weakness right now. So I guess I reduce the risk by 50%. Okay, we traded up into order block and inverse for value gap low level. So we actually want to see price now trade lower. I mean, it's 11:02. I guess we should just commit to the trade. Doesn't look really, yeah, okay. Difficult day. But we reduce our risk, so yeah. It's okay. Yeah, bro. Shit happens. We didn't close strong. We only wick lower. Body stop and close above the wick. That wasn't looking too bearish. And I didn't want to leave the stop loss above this auto block, bro. We went up once. Didn't respect the fair value gap in here. Went lower, so I didn't want to endure another price run higher against my trade. So I guess reducing the risk was the right decision. I mean, we could have also placed our stop loss below break even when price was here. But yeah, I wanted to give the trade some breathing room, you know. As you can see, we only had like choppy price action. So yeah, difficult trading day. That was the first trade in here. Stopped out. Beautiful reaction first. And then just bam, bro. Look at this fucking candle, bro. This candle is huge. No. Come on. 42 points. Oh, that's crazy. Okay, yeah. It would have been stopped out. So, right decision to reduce the risk. Yeah, bro. Difficult trading day. I was trading against high time frame bullish buys. So, rather looks bullish. But yeah, it was 50-50. Like I told you, it was 50-50, and trading a 50-50 environments, that's definitely not high probability. So yeah. No, yeah. Bro, I appreciate you, bro. So I'm ending the stream right now. I'm going to journal these two trades, and yeah, we definitely keep it up, bro. You still have enough to work on, but I guess we'll figure this shit out, all of this shit out soon. So yes, see you, brother, and I catch you in the next one. On I'm contemplating if whether or not I should be streaming the next few days because of the holidays and stuff. December price action, as you can see, was also not the best. So maybe I'm starting live streams again in January 2026. We see. Yeah, if you want to join my Discord, feel free to do so. Link is in the video description down below or in my YouTube or TikTok bio. So yeah, keep it up, brother, and we'll see each other in the next one. Be safe.